In our recent video, we said that there are people who have become skeptical because of the FTX collapse. The FTX collapse made a lot of people lose their money. Until now, the whereabouts of their investments are nowhere to be found. This does not only affect the crypto world, but it also presents huge repercussions for all financial institutions and systems worldwide. We all know that trust in a relationship is a very vital factor for its success. Without people's trust and faith, crypto will be put in a very tight position. Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. In today's video, we will be talking about why you still need to trust crypto. We will feature Cathie Wood in this video again. We already had her once in our previous post. For today's topic, she would tell us why you should trust cryptocurrencies now despite the FTX scandal. Again, we will give a brief introduction about Cathie Wood. American investor Cathie Wood is the founder, CEO, and CIO of the investment management company ARK Invest. Wood founded ARK in 2014 with the intention of packaging active stock portfolios in an ETF format after working for other investment firms. Recently, Cathie Wood's ARK invested $60 million in Bitcoin despite analyst concerns about the risk of contagion after the FTX collapse. This is a bold move considering what is happening in the market right now. Recently, she was asked in an interview as to why she still trusts crypto. Here is a clip of her answer.
Investors trust crypto. Why do you trust crypto at this point?
Yes, if you look at the blockchains, let's use the Bitcoin blockchain and Ethereum, what you'll find is they have the infrastructure, the technology has not skipped a beat throughout this entire crisis. In fact, the hash rate, Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at 24 billion. That is an all-time high. So we think the infrastructure is working beautifully. As far as Coinbase, this is an onshore regulated company and wanting to help shape regulations. Brian Armstrong, the CEO, and Alicia, CFO, have been leaning into what's going on right now and saying, okay, regulators, we need more clarity in order to protect investors. Those who wanted to get involved with certain types of crypto were forced offshore, and look at what's happened. So I think that Coinbase is going to come out here looking very, very strong. It just lost a very big competitor in FTX.
Well, what is the market missing, though? Because
basically, Cathie Wood is saying that the blockchain system and technology are very strong. Despite all the chaos and crashes that transpired, they remain resilient. The investment put into these coins remains secured because their security system is top-notch. Aside from that, the value of these coins remain consistent in terms of being relatively high compared to other coins. So, she claims that their infrastructure is working perfectly amidst this chaos. Aside from that, there is now a clamor to improve the regulations surrounding the crypto world. Of course, these regulations are not meant to hamper the booming system of cryptocurrency, but to help its investors. The regulations are meant to increase the security of crypto coins so that issues and scandals like FTX will not happen again. Cathie Wood also said that Coinbase is getting stronger, especially after it lost its FTX competitor. Due to these reasons, she completely trusts the system and the potential of cryptocurrencies. During the interview, she was also asked about why the market still looks bearish. There's a question about Coinbase shares remaining the same despite the collapse of FTX, one of its competitors. Here is her answer.
No, because, that could be one narrative, Cathie, but at the same time, we haven't exactly seen shares of Coinbase rally since FTX's collapse. Do you think to you that represents potentially broader concern about just people's interest in crypto following FTX's collapse?
No, I think it's more fear. I think many people say we don't know what we don't know. So what we do is we step back, put a little perspective into the situation here. And what do we have? So the entire crypto asset ecosystem is an $800 billion ecosystem. Apple is 3 times larger in terms of market cap. So that's some perspective. Many people are saying, well, okay, is this another Lehman? Could this be, could we see the domino effect here? I've just given you one reason why. The banking system back in 08, 09, trillions and trillions of dollars, and it was the global banking system. Right now we have, it seems, from FTX, $5 to $10 billion in creditors as FTX has filed bankruptcy. They will be making claims. If you look at Lehman, that was $1.2 trillion in claims. So again, just trying to put perspective, this is fraud. This is Madoff. Madoff was $64 billion in claims. Again, FTX, 5 to 10 billion. Now, I know that crypto assets are, they attract a lot of attention. This is, the 3 revolutions we talk about all the time, a new monetary system in terms of the first global, private, meaning not government controlled, digital,
right,
rules-based monetary system. That's Bitcoin, a very big idea. DeFi is a very big idea. And while that has been thrown into question in terms of, shifting from one exchange to another, we've had a lot of shifting around. But I think DeFi, in terms of taking the middlemen out of financial services and making the ecosystem much more transparent with much less counterparty risk, is going to take off. It will continue to move forward, we believe.
Cathie
Wood answered this by saying it's because of fear. They are scared that FTX is just the start and the whole crypto system will follow. Wood also said that their fears are valid as it already happened during the 2008-2009 global financial crisis. It is when the worldwide financial system crashed. Due to the trauma and people's value to their money, they are scared that the same thing will happen to the crypto world. FTX could be a catalyst for crypto to crash. However, she stated that the system is becoming more transparent. Hence, people can trust the system that it will remain robust despite the scandal. Now that you have heard Cathie's answer, I have a few questions for you. Do you think that the crypto world would bounce back after the FTX crash? What other factors do you think are affecting the low market shares of Coinbase and other platforms right now? Are people scared? Will you let it pass because it still sounds sketchy? Let us know what you think by sharing your thoughts in the comment section below. Also, please like this video and subscribe to our channel. We greatly appreciate it, and you will also be a part of our growing community. We all know that the FTX crash affected the whole crypto world. The prices went down because of it. Cathie Wood is also asked in the interview about how long she thinks that FTX's effect will last. She said that the crypto system will recover quickly. According to her, we already found the people involved in it. We are currently solving it. Aside from that, the system and the technology used for the coins Bitcoin and Ethereum are strong. Hence, it would be easy to catch up with the money that is lost. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you will be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.